I'm gonna try the stream and I'm gonna try them both, see what happens. So gonna be a little bit different today. But yeah, I want to thank you guys all for coming and hanging out with us on a Monday morning.
Yeah.
I bring you guys none other than the one and only Joey Garnett, and he is my boy. Like we have been working together for shoot. I mean,
Since 2016.
I have been here for 6 years, 7, 8, 9, shoot, 9 years.
Yep.
Um, it's been a minute. And Joey is like my lifeline in the condo department. So like when I get stuck doing something or like trying to figure something out, I pick up the phone and I call my boy because he knows condos like the back of his hand. And this poor guy handles the entire country. And it's just nonstop for him, day in, day out. I mean, it's pretty incredible how many condos there are and how many situations we have with condos. Um, so let me just bring you to the forefront here. Are we both there we go, right in the middle of everything. So you guys, Joey's gonna talk to us about condos, about all the financing tips, tricks, what to look out for, the little nuances, and just he's gonna make you a smarter human being today, especially when it comes to going out there and helping people buy condos and what to look out for. And then please don't hesitate. Drop some questions in the
Mhm.
chat box, and then we'll wind up circling back to the questions at the very end. But if anything pops up, like either jump in and ask or throw a question in there and we'll address it at the very end. So without any further ado, my main man Joey, would you like to take over the screen? There you go, bro.
Like flawless, seamless. It's just how
Boom.
we do things
I
around
think
here.
you've done this before.
Thank you for that fantastic introduction. I really appreciate that, Ed. My name is Joey Grant. I'm the condo project analyst manager for the East Coast. My partner in crime, Ian Westcott, also does this, and he's my West Coast counterpart. But he moved back to the East Coast, so not sure how
I'm
much
not
longer
sure
we're
how
gonna let
that's
him.
gonna work.
I'm not sure how much longer I'm going to let him keep the his West Coast title, and we're just going to say, we're America's condo managers. That's what we're going to say from now on.
Either that or he's gonna be getting up at the crack
Yeah, yeah,
or
yeah,
staying up late. Staying up late. That's what he's gonna be doing.
exactly. All right, so let's just jump right into it. For the longest time, condos has been a scary word, right? What happens everywhere else? What happens, when you don't control the condo review up front is, there's lenders out there that don't even touch the condo stuff until the very end when they're doing the collateral review, when they get the appraisal in after the borrower's already approved and all the inspections are done. And then they want to talk about the condo. And, with that process and that thought method, you get these the 11th hour condo denials, and the borrower sitting at the closing table talking about, I can't approve this condo with the down payment that you're using right now or the loan program that you want to use. We saw this and we saw this need, and we created something fantastic. We have a dedicated condo department with resources and expertise and all that kind of stuff. But we provide upfront condo review. We can do a condo review without an appraisal. We can do a condo review without a purchase contract. We can do a condo review sometimes without a questionnaire. So, and that's the express that, like, we put into it. I mean, the with the condo guidelines changing basically every 90 to 180 days, with every entity, with every agency, the GSEs, Fannie and Freddie, the Gs, the FHAs and the VAs, their condo guidelines update, literally, the 4 or 5 times a year. And you got to stay on top of those guideline changes so that you can, approve projects. And what we do that's a little bit different, is, we, in addition to, obviously getting FHA and VA projects approved for free because the FHA and VA don't charge for that. We also sponsor, PERS packages directly to Fannie Mae. We are a Fannie Mae sponsored approval entity. We can actually approve projects, and our lender approvals are good to Fannie Mae, and they're good to Freddie Mac, and they're good for all of our jumbo investors that accept our Fannie Mae and Freddie Mac project approvals. We're also a FHA Del Wrap lender. We can issue project approvals on behalf of FHA as well. And even if VA rejects it, we have the wherewithal and the points of contact at the individual VA offices that we can go in and get exceptions on rejected projects too for VA. And we're changing the industry, and we're trying to change the industry for the better so that we can give back to our communities that we serve and we love serving. But first and foremost, what is a condo?
Let me just take a time out for a
Hit
half a
me.
second and
Hit
interject
me.
you guys. From our perspective, y'all, from a loan officer's perspective, from a realtor's perspective, you have a client that's approved for a conventional loan, right? And we want to go out, we want to put an offer in on XYZ condo, right? And you guys, the process of condo underwriting, it takes a little while because we have to reach out to these condo, like to these HOAs. They have to provide us documents. Not everybody subscribes to these automatic document websites, right?
Mhm.
Sometimes they're smaller HOAs. They take a week or two to get back to us. You can't get a hold of the manager, what have you. We're able to go in and submit a form to our condo department, and they're going to jump on this before you guys even make an offer on the property. Like that's such a huge advantage because you go into making an offer knowing that your financing is going to be okay with this particular project. So you don't get that anywhere else. There's no other, like I've never heard of another bank, and I've interviewed with plenty of them. Like they constantly are calling me, right? To get recruited to them. And I asked them about the condo department. Nobody has condo departments like this that are willing to put in the effort. And think about it, you may not even get that offer accepted, but we're still allocating our resources to make sure that we're making this a super smooth transaction for everybody up front. And not only like for conventional loans, because again, there could be all sorts of nuances, and we'll get into the nuances in a minute, but just this process on an FHA that's not an approved FHA building, or again, like a VA that's not an approved VA, we have the resources sitting right there. You're underneath me. I don't know if you if that's the same on yours, but yeah, we've got the resources to help you guys out. So it'll make your life a lot easier, trust me.
All right, what is a condo? A condo is just a legal form of real estate ownership, and it's the airspace. So why does the condo need to be approved? Well, because you're sharing this ownership with all of your neighbors, there's an additional layer of risk that has to be assessed in underwriting and credit worthiness. So just like your borrower has to meet certain credit worthiness things, ability to repay the loan and a debt to income ratio and things like that, the condo that the borrower wants to buy into also has to meet those certain credit risk worthiness assessment tiers and data points. Does the HOA have adequate insurance? Does the HOA have adequate, a funding plan for a budget to sustain the life and livelihood of the HOA and the utilities and the insurances and future capital improvements, the new roof in 10 years, the deck inspections in 8 years. Is the HOA financially responsible and being managed adequately to make sure that the HOA is going to be there the next year and the year after and the year after. So we're never going to put a borrower in a scenario, in a situation that's going to do them harm on their credit side. With a loan they can't repay. Excuse me. We're never going to put them in a building that's going to collapse next year. Okay, so that's what all these guidelines are in place to prevent and to protect, to make sure that the HOA is adequately insured and funded and managed correctly in accordance to whichever loan program's guidelines the borrower wants to use. The rules are different for Fannie and Freddie. The rules are different for FHA and VA, and whatever loan program they want to utilize, that's what I'm going to underwrite with no additional overlays.
Just so
Uh,
you guys understand, Fannie and Freddie, they're the two government agencies, right? That basically fund, I'd say
all of
90,
them, all of them, all of them.
95% of the majority of the loans that are out there.
Yeah,
You have this smaller niche of non-qualified mortgages, right? Like your
yeah,
bank statement loans and what have you, and your, there's stated income loans that exist, the DSCR loans,
yeah,
the all those, but those are banks with investors
yeah,
that give their own money that don't follow these guidelines for the most part. This is Fannie and Freddie that handle all conventional,
yeah,
and they have all the rules for FHA and VA as well. You got to follow all their rules in order to be able to get the financing done for majority of our transactions.
yeah. So every condo falls into two categories: warrantable or non-warrantable. And I want you to take that term warrantable and non-warrantable with a grain of salt, because it really depends on who's telling you is warrantable or non-warrantable. If Fannie Mae is telling you it's non-warrantable, then it doesn't meet one of their 17 ineligible condo characteristic guidelines. If Freddie Mac is telling you it's non-warrantable, that means Freddie Mac is telling you that it's not. It doesn't meet one of Freddie Mac's 17 ineligible condo characteristics. But if another lender is telling you that it's non-warrantable, challenge them. Say, hey, which ineligible characteristic are you talking about making it non-warrantable? Uh, Go ahead. Uh-huh. Yeah, challenge them, because there's a lot of lenders out there that have, their additional rules and risk assessment criterias and data points that they put on top of what Fannie Mae and Freddie Mac require. And that's an overlay. So we don't have any overlays whatsoever. We underwrite directly to whatever the guides say. We don't
And
jumble them up.
And
Yeah,
it's so funny that you say that, right?
yeah,
Because so for instance, one of the questions I always get, hey, this property doesn't have 51% owner occupancy, right?
doesn't matter.
That's an overlay, you guys. Like that is an overlay for owner occupied purchases. It is a rule for investor purchases, sure, but it's not a rule for owner occupied. Like, think about it. Fannie Mae wants more owner occupants because they're going to take care of these properties more than an investor is going to, right? So they want that. They don't care about investor occupancy, but you know who does? Bank of America, Wells
Yeah,
Fargo, Chase, like those big boys. They've got their own rules, their own overlays on top of what Fannie and Freddie says, and they just say, "Hey, I'm going to be more conservative. I don't want
that's
this loan."
exactly that's exactly what it is. It's a risk assessment and a level of conservation. That's all it is. But if another lender is telling you a project is non-warrantable, I challenge you to challenge them, and ask them which ineligible guideline, which characteristic is making this project non-warrantable. Because they are very specific. There's 17 of they are super specific. Like, do you have a mandatory membership? Do you have a single entity that owns more than 25% of the units? Do you have major litigation that involves structural safety, habitability, functional use of the project? Do you have a project that's in need of critical repairs because they're partially evacuated from a fire that happened 3 years ago that still isn't being rebuilt? I mean, that's there's very specific things that make a project non-warrantable. And it just drives me up the wall when I hear a project is non-warrantable and I get the docs back. I'm like, I can approve this, no problem. Here you go. Here's your
And
approval.
so, you guys, it's not an issue. If you guys ever bump into that and you are, your buyer is working with some other lender or what have you, or even your seller, you guys,
Yeah,
if you're
seller.
taking a listing, y'all,
Yes.
and you want to get that condo complex pre-approved, hit us up. Like, we'll gladly do that for you. I mean, it's not like we have anything to gain
No.
for it, but you do, and we're here to work together and help you guys out. So just let us know. Like, hey, Eddie, here's the address. Trying to got a listing coming up here. Can you please tell me what we should need to look out for? What kind of loans can we do? And we'll look it up for you. We'll make sure that we get you guys dialed in. So
So the
definitely
way
use this as a resource, y'all.
Yeah, the way that we're allowed to do that, the way that we can do that is we take our condo process, our condo express process, and it works right alongside of our 671 promise. 6 hour upfront underwriting, 7 day turn time, 1 day to close. So 671 is our rule. Okay, it's our own internal rule. We can do the condo piece right alongside of that. There's no interference whatsoever. It doesn't become a 614 one just because you're doing a condo, or a 621 one because you need FHA approval. I'm going to, if it's already FHA or VA approved, it's going to fit into the 671 every time. I promise you that. If it's not FHA or VA approved, we can work on that. There's express roads that exist, okay? But I have to know which vehicle we hopping in. All right. So do you apply? You get a borrower that wants to apply, and they're taking the application, and well, we see that it's a condo. All you got to do is tag in the condo team. All we need is the point of contact at the HOA and the name of the HOA. That's it. Those two data points. What's the name of the HOA, and who can I call at that HOA to get my questionnaire filled out? It's usually the same person the seller pays their dues to. So find out who they're paying their dues to, and that's the point of contact we want, so that because that's who's going to fill out my questionnaire. And that's kind of how we do it with the Condo Express. Is we will reach out to the HOA, order all the applicable data points that we need to assess that project for whatever loan program that borrower wants to utilize, whether it's conventional, FHA, VA, rural development, bond, jumbo, high balance. Everybody has different rules. You just tell me what they want to use, what program they want to use, and I'll go get all the data I need to bake that cake, and we'll have our cake and eat it too. So what you can do as a listing agent to add value to that list, okay? Your seller at that HOA has access to the two most important data points right now, which is the budget and the insurance. These aren't things that need to be filled out. These aren't questionnaires that need to be ordered. This isn't a resale estoppel. This isn't a statement of past dues and current dues and special assessments. Right? This isn't anything that needs to be figured out or filled out or anything like that. These are two data points that are the most prevalent right now in our industry: is the budget and the insurance. So if you're listing, you're helping list the project, get the budget, get the insurance, get it over to Ed. That way I can scrub it up against the $2.5 billion of condos that we closed last year to make sure that we have it on our approved list, or make sure that it's not on our it's not on anybody's Fannie Mae's unavailable list, or Freddie Mac's unavailable list either, or FHA's rejected list for something that can't be cured, or VA's rejected list for something that can't be cured. So if you're listing a condo, two pieces of information: the budget and the current insurance. With those two pieces of paper, I can give you 95% certainty of what we're allowed to do with that project.
And that's legit, just a seller reaching out to the HOA. And trust
Yeah.
me, when they reach out, like when the owner reaches out to their own
Yeah.
HOA, they get responses like that. When some other company reaches out, hey, we might get back to you in a week or so. Like
Well,
sometimes it's a little bit slower than what should be.
most HOAs have an HOA owners portal where, even if it's a self-managed, a smaller project, you can still log into your owner's portal and see what the current insurance is. Because if you have to renew or change your homeowner's insurance, your homeowner's insurance is going to want to know, hey, what's covered under the master policy, so that you're not, buying insurance you don't need to buy, or under insuring insurance that you should be buying. So the insurance is readily accessible to every single owner. Even self-managed small projects have an owner portal, or a person appointed to be their owner portal that they can reach out to directly. But budget insurance, I can give you 95% certainty what we're allowed to do with that project off of those two documents alone.
Cool. I did not know that. Learn something new every day.
All right. So, what we like to do is this is the fun part. This is the fun part. So in addition to the normal cookie cutter stuff, your conventional conforming, Ed had mentioned it earlier, all of our, non-conforming outlets, the DSCRs, the bank statement loans, things like that. We've been working with investors for the past 5 years, other than Fannie Mae and Freddie Mac, those old school big banks, Goldman Sachs and the likes of them, to come up with certain loan programs that do allow Ineligible, non-warrantable condos, things like mandatory memberships. I have an outlet for that. Fixed rate, not a problem. I have an outlet for condotels. I can do condotels, lender level review, no additional exceptions needed. Projects with a single entity that owns half the units. We call those apartment communities, but still, we lend in them, not a problem. I have an outlet for those. Projects where they don't have an adequate reserve allocation. I got an outlet for that. Projects where
And
they
these are
have,
all non-warrantable.
these are all non-warrantable and ineligible characteristics. Yes. Projects that, you go to, I don't like dropping other lenders' names, man, but you go to these other lenders and they're saying, yeah, that's non-warrantable. I'm not touching that. Or that is non-warrantable. I'll do it if you put down 25%. That should be a red flag, guys. Yeah, just because they want you to put down more money doesn't mean it's non-warrantable. Not more money is a difference between full review and limited review, and that's an entire different can of worms. You can have there's only four data points that are difference between full review and limited review, and that can be cured by putting down more money. And it's very specific. Reserve allocation listed on the budget, not the budget itself, not ineligible characteristics on the budget, but the reserve allocation listed on the budget. The dues delinquencies for the regular HOA dues, not the dues delinquencies for the special assessment dues. The fidelity insurance for at the HOA that the HOA purchases, not like per unit deductibles for perils, or not flood coverage that is not at least 80%. So it's, like I'm saying, it's super duper specific. Those are the only four things: reserves, delinquencies, insurances, and the investor concentration on an investor transaction.
So did hold on, I'm gonna just take a TV timeout. I want to make sure that you guys are all aware of how important what he just said is.
I'm sorry, I'm a huge condo nerd, and I go
Yeah,
quick when I get
you
excited.
totally are. I love it. So the four things that, okay, when you call, if you want to take and be proactive and call the HOA yourself if you have a listing, and you ask them about their insurance. So let's talk about insurance for a second.
Do you have co-insurance? Yes or no? Okay.
If
Do
it's
you
yes,
have do you have 100% of your insurable replacement cost value being covered? Okay.
and that's it.
Are you in a flood zone? Do you have flood insurance?
These are very important little questions that you could ask.
Okay.
Thank God that this is recorded, because we can go back and go through all this again.
Yeah.
But I can write it up and send it
Yeah.
to you guys as well. These really important questions to ask, because you can get ahead of the game when you're taking this listing, right?
And the final question is always going to be, is there any pending litigation?
So
That's it.
insurances, what about budgets? Talk to me about budgets for a second.
Budgets are budgets, and budgets are going to be different. Every single HOA has a different formatted budget. Every single HOA has a different needed budget. Every single HOA has a different way to do their budget. So budgets are super duper case by case. And I've never seen a budget from one HOA that was identical to another HOA. Even HOAs that I've approved for 3 or 4 years in a row, every year the budget is different.
So we're more concerned about a reserve.
We're more concerned about whatever the reserve contribution listed on that budget and how it's being represented. And not every HOA calls it the reserve allocation. Some people say it's the savings. Some people say it's the a capital improvement fund. Some people say
Retained
it's the
earnings, like
fund.
there's all sorts of different stuff. Yeah.
Yeah, 100 different 101 ways to die in the West. That's on the budget, and not a problem. So budgets are super duper case by case. And if you can get your hands on the budget and you really want to dive into it just to kind of get an idea, do it. Get the budget, see what the incomes are, see what the expenses are. Just look at it. It's supposed to make sense. It's just a plan of planned expenses for the HOA over the next 12 months. It's supposed to make sense. If it doesn't make sense to you, then something's wrong with that budget, right?
So I want to ask these four questions. I want to ask him, hey, was it 10% reserves?
Do you have a reserve allocation listed on your budget?
Do you have
It
a
doesn't matter if
reserve?
it's 10% because there's certain things I can take in and take out and move around because the guidelines allow me to do that. So do you have a reserve allocation listed on your budget?
Do you have greater than 20% of one owner owning the entire?
Do you have a single entity that owns more than 20% of the entire units?
Do you have insurance that covers? Do you have insurance?
100% of the insurable replacement cost value.
And the last question would be your owner occupancy. Do you have 51% owner occupancy?
No, no, don't ask that because that doesn't matter.
That doesn't matter.
No, that doesn't matter.
Okay.
When is that?
Unless it's an investor.
Yeah, no, even then, don't ask that because
Are
most
you in a
investors
flood zone? Do you
are
have
you in a flood zone is the last question. We're
Are
we're
you in
we're,
a
we're
flood?
waiting for somebody to chime in. Up, leave us out of here to dry, Kish. Dang.
So
I
those
was
four
talking
questions,
on with my mute on for like a minute. No worries.
I saw your mouth.
or you can just call Matt and I
Yeah,
send us that address and we'll go look it up for you guys. So
absolutely.
you don't have to do that either, but just in case you wanted to and you want to be proactive about it, or just hit us up.
Yeah.
All right, moving right along. Sorry, I didn't mean to interfere. Just figured I'd.
No. We're at the Q&A part. That's the whole slideshow. We're at the Q&A part. That's why I pause here. We approve projects with zero overlays. We're not gonna deny a loan for that wants to use a Freddie Mac's AUS findings based on Fannie Mae's guidelines. We're never going to deny an FHA loan based on Fannie Mae's guidelines. We're never going to deny a VA loan based on FHA's guidelines. There is no crossover. Whatever loan program you want, those are the guidelines that I'm going to show you are in compliant or not in compliant.
So talk to me about a sewer.
Single unit approval. Okay. It used to be considered spot approval, but spot approval was never actually spot approval. That went away. I want to say 2008 is the last
So
time
a little
spot
background
approval
on
was.
what it is, right?
Yes. FHA allows lenders to request case number assignments in order to order appraisals. There's only one way to get a case number assigned for a condo, and that's if the condo is approved. There's two ways to get a condo approved.
And that's a whole project, not just that one
The
unit.
whole project. The
whole
whole project.
project has to be approved.
Okay, the whole project. There's only two ways to get a whole project approved: DELWRAP or HRAP. We are a DELWRAP lender. We can issue project approvals. We do so in a very limited capacity. But we also submit packages to FHA for HRAP, HUD review and approval process, versus DELWRAP, direct endorsed lender review and approval process. Excuse me. So when we submit a package up to FHA, that's called HRAP. When we review the package here, that's called DELWRAP. Now, the guidelines and restrictions and requirements to get a project approval from FHA are black and white, clear as day, true, false. Every single guideline from the HUD guideline handbook 4001, it's all true, false. It says this is what they require, this is the exact document they want, boom, done, right? FHA, government. So they also have a section in that guideline that says the lender can do the review if this 14 pages of extra guidelines are met. Okay, so we still have to certify that the other 60 some odd pages of guidelines are met, and then if we want to do a DELWRAP, there's another 14 pages of extra guidelines on top of those guidelines, on top of FHA's requirements, things like minor stuff. It's okay. FHA will do a single entity and approve a project if a single entity owns 49% or less on case-by-case scenarios, right? But we as the lender doing a DELWRAP can't go over 10%. Same thing for SUA. There's additional guidelines that need to be met. So FHA says, the project can't have more than 10% of the unit owners already be FHA insured. So there's a 10% cap. If more than 10% of the units already have FHA mortgages, we can't do a single unit approval. We can't get our case number assigned without submitting the project that is approved by us or getting them to approve the project.
So how long does an entire project typically take to get approved? So say like I have clients that they're selling their condo and they want to get the entire complex approved so they can open up the pool of buyers, and they're willing to go through
30 days or less.
30 days or less.
If they have, as soon as I have all of the applicable data, all 17 items to the 18, 20, depending on the makeup of the project, it's about 20 items. I have all 20 of the data items packaged up, sent off to FHA, I'm going to get an answer within 30 days. And they're actually closer to 3 weeks right now. FHA's been pretty quick lately, especially Santa Ana.
If you guys are taking the listing, what about VA, out of curiosity?
Same, about 3 weeks, as long as I can get all the data points uploaded without, having to explain too many missing points.
And what
VA
does
is a
this
little more
cost?
lenient. It's free.
It's free. So
Yeah, FHA and VA don't charge. It's free.
you're taking a listing
Mhm.
why in a condo complex and it's not FHA or VA approved. Why wouldn't you take the extra steps of helping your seller open up that pool of buyers and try to help them out and sell it quicker? And you're building your credibility and your rapport with them by saying, hey, I just noticed it wasn't FHA approved. Why don't we try and get that done so we can have thousands of more people that could possibly purchase your place, open up that pool, and possibly create a nice bidding war when we do hit the market. You
Yeah.
guys, you're taking the listing.
And FHA condo approvals are universally accepted for all of the other entities. Freddie Mac will take a FHA project approval. Fannie Mae take a FHA project approval. You can't do a reverse mortgage without it on a condo unless it's FHA approved. And that's the next age group up.
User testimonial, we got a VA condo approved last month in a week.
Yep.
So if you have VA buyers or sellers in a complex that's not approved, it took us a week. And
that's an assumable mortgage without mortgage insurance.
That is a nice loan, I'm not gonna lie. So please don't forget, you guys have this artillery like in your pocket. Don't forget to use it. You can offer it up when you're going out there on a listing appointment. And then when you're talking to your buyers too, hey, if we're going to be looking at condos, make sure you point out which complexes you like. If you're really bent on like living in this particular complex, like let us know. We'll do all the legwork for you up front. And help you guys out. I mean, we're in this together, right? So whatever we can do to help you guys out, Joey's got our back. Like, it's awesome. Having such a passionate condo nerd on our team.
I'm a nerd.
I love it. Love it, love it, love it. Other questions, you guys. What Dana had asked, what percentage do you look for on HOA capital reserves? I think we went over that.
It's okay. So the guideline is that the guideline is the HOA has to have a represented 10% reserve allocation listed on their budget. But the guidelines also say that you can move this utility around if it's a shared utility. You can move this master association dues around if it's a shared master association. If there's a bunch of little caveats that come with it, but the base guideline is they want to see Fannie Mae, Freddie Mac, FHA, and VA. Everybody wants to see this. Their approved budget has an income, and in the expenses, a fixed expense for a reserve allocation that represents at least 10% of that total income. That's the short answer. 10% of the total income needs to be set aside for reserves. And if it doesn't, just give me the budget. I'll see if I can't make it work.
Thank you so much.
That's awesome. You guys have been very quiet. Are there any other questions about condo financing?
Let's put it in gallery mode so we can see everybody.
There we go. Up, Gaga. Any questions?
So another common issue right now in the industry is the per unit deductibles. I don't know if that's hit you guys yet, because you guys have been dealing with fires and stuff and floods and stuff. But what's going on right now is a bunch of the insurance providers, little behind the scenes stuff. A bunch of the insurance providers stopped providing insurance. Okay. So what HOAs used to be able to buy for insurance coverage, 3 years ago, those providers don't exist anymore. So the provider pool went from 3,000 to 300. And those 300 providers that are left are basically charging whatever they want for insurance. So insurance premiums have gone from, let's see, the last one I looked at this morning was 2018. The insurance premiums were 80,000. 2020 they were 180,000. 2024 they were 580,000. So it went from 80,000 4 years ago to 580,000 for the exact same insurance. Is the cost of the brick has only gone up a nickel. It's the exact same insurance, but instead of being $80,000, it's $580,000. And the HOAs are doing, special assessments to cover the difference. They're doing modifications to their structural components and upgrading safety features and things like that to kind of help with the insurance premiums. But the bottom line is what they're also doing is they're lowering their insurance coverage, or they're having a higher deductible or lesser coverage. Instead of replacement cost valuation, they're getting actual cash value valuation. And Fannie and Freddie hate that. We have an outlet. We have a few investors that will take actual cash value. So it's not a complete, hard stop. Unless you have to go Fannie or Freddie or bond, then it is a hard stop. Actual cash value on the insurance is a hard stop for almost everybody. That's one we're seeing a lot right now.
Since you brought up special assessments,
Yeah.
could we just go over that real quick? Because I know there was some significant changes just a handful of months ago, right? I think it was at the beginning of the year that Fannie Mae came out with, because we got dinged on one of these special assessments.
We did.
Here in San Diego. We can't do a project that one of our agents has a listing on because they had a $216,000 special assessment for, there was hundreds of units in this place, but everybody got dinged with like, I don't know, it was like $6,000.
It was small. It was a smaller one. That was one of the smaller ones we've seen.
That was a smaller one?
That's one of the small. I've seen some biggies. All right. I was just looking at one this morning that was 31,000 with an additional 10,000 pending per unit. 74 unit project, pending $50,000 special assessments over the past 3 years to account for them having not adequate hazard insurance.
Dude, and my neighbors are bitching about like $100 for the year.
It's $40,000 to $41,000 in accounting right now per unit on a special assessment over the past 3 years.
So now we can't touch them, right? Yeah. Until they have completion or
well, I'm gonna show you the why behind that. So this right here, and anybody can look at this. This is Freddie Mac's. I don't have to log. I'm not logged into Freddie Mac to look at this. This is regular Freddie Mac selling guide. You can just Google Freddie Mac 57.1.03, and you'll get to this page. And it was last updated December 8th, 2023, which was the when they added the temporary guidelines from the Freddie Mac bulletin from the beginning of COVID. To add these ineligible characteristics because they had to redefine this right here, projects in need of critical repairs. And I pretty much have this page pulled up at all times. The problem is the Champlain Tower collapse, that tragedy, they never want to see that again. Fannie and Freddie, FHA, VA, FHFA, all of them. No. Nobody.
The one in Miami, right?
Yes, the Champlain Tower collapse in South Florida. They never want to see that again. And in order to help prevent that from ever happening again, they're putting that earnest on the HOA itself. The HOA knew that the project needed critical repairs. The HOA knew for years that there was something wrong, and they just put it off. And then that happened, and I'll never get that image burned out of my head. I promise you, it messed me up. Projects that are in need of critical repairs are ineligible
until they're done.
That's it. Until the repairs are done, and Freddie Mac will only accept the required repairs and a new inspection has been completed in document. Must review an engineer's report or substantially similar documentation to determine the repairs solve the building safety, soundness, structural integrity, and habitability concerns.
So like the one here in San Diego that we're talking about in Mission Valley, they had walkways up to the units because they have entrances from the outside, and there was it was really shaky handles going up there, and I mean, you name it. There was the overhangs were like cracking.
Yep.
So they could fall on you, and they had like cement on top of them, so they could
Yep.
like literally just come down and whack you in the head. Same thing with the carports. Were not being maintained the way they should have been, and you could see how much damage there was from termites and so forth on them. So no no financing. Like, can you get around that? Can you do
No.
non-warrantable condo financing on something like that?
No, every single one of our non-warrantable outlets and every investor that we've petitioned with, they're standing arm in arm with Fannie and Freddie. If the project's in need of critical repairs, let me know when the repairs are done. That's it. If I and here's the hard part is I have to prove, especially if there's a special assessment for work. There's a special assessment for insurance premiums, not a problem. I can document that all day. Special assessment for upcoming reserve study recommendations for 5 years from now, I can document that because the reserve study, not a problem. But if they're talking about doing a special assessment for work right now, it's hard for me to prove that that's routine. If it was routine, you've been saving up for it for the past, umpteen years, and you would have the funds without the special assessment. And there's some wiggle room there with common sense, and we take a very common sense approach to it. But that's the first hurdle that we have to crawl. And if I can't prove the work is routine, I have to prove the work is done.
Yep.
That's
Makes
it.
sense. Makes sense.
So you got a special assessment for work. That's what those are the hills I have to climb. Is I have
So
to
another red
I have to
flag,
prove it's
guys.
complete.
Ask about special assessments.
Ask
Like,
about special assessments.
if one of the condo projects has a special assessment, so let's get our hands on the documentation up front,
Yep.
like right from the get-go, and we'll have our peeps review it, and we'll let you know one way or another, hey, there's no way anyone's touching this, or this is how we can get around it.
And a project with an evacuation order due to an unsafe condition, either partial or total evacuation. Because that's the thing, guys.
Have you seen that?
Yeah, somebody's been blowing me up this morning. That's the fire I was trying to put out this morning. The HOA in Houston building fire on one of the two buildings, 37 units in this building, 37 units in this being garden style, 4-story, parking underneath 3 stories of units. A fire happened in this building over here. And it obliterated 11 units. They shut down tore down the entire tower, and they're currently in the process of rebuilding it. Okay, that's just half the project. Okay, these units over here, nothing wrong with them whatsoever. But guess who can't do anything with Fannie Mae and Freddie Mac until this tower is built?
No way.
Partial evacuation order.
Even on that side?
The certificate of well, here's the thing. I say yes to a unit in a project, I have to approve the entire project, all 74 units in this particular instance, when only 37
that's
exist.
ridiculous.
So the only way to get around that is the HOA would have to dissolve itself and reinstate itself as a 37 unit project and make the other building its own sub-association. Yeah.
Yeah. Wow.
Yeah, a lot of real estate attorneys out there, just ready for that phone call.
Wow.
But that's a partial evacuation of the entire project. When we say yes to a unit in a project, we're saying yes to all 200 other units in that project for the next 12 months. And that's what that risk assessment is all about. That's why there's lenders that have additional risk overlays on top of the Fannie Mae and Freddie Mac guidelines, is because of that exact reason. They're saying yes to the other 200 units for the next 12 months.
Wow. Well, I'm glad I remember to ask you about this, because super important. I mean, and you guys, I hope you guys understand like how much more complicated it is for us to do, or for any bank to do financing in a condo, right, than it is for a house. We don't have to worry about any of this stuff for a house. Like, literally, like the walls are there, like everything is up, like you can move in, it's in decent shape, like it's not falling apart. Like, okay, cool, we can do financing in it. You don't have non-warrantable homes. You have non-warrantable condos. So there's a lot of nuances when it comes to doing condo financing. So like I said, if you have clients that are looking to buy or sell a condo, don't hesitate. Just hit us up. Let us know.
Yeah.
We'll do the heavy lifting for you guys and make you guys look like rock stars.
Absolutely.
Cool, y'all. Any more questions, you guys?
Gaga, you have a question?
No, I just wanted to say that I think that that's great because I don't want my buyers to buy a place that's going to fall apart anyway. So all these things
Thank
that you're
you.
doing, I don't care if it's.
Gaga gets it.
I don't want you to kind of try to make it work, work it out because
Yeah.
I don't want them to get into that. And it's really great because it's kind of like an extra service that you do for us. Getting into this kind of research and telling us, hey, you better run because this might fall apart in like whatever, or maybe next year they will have to start paying $6,000 a month instead of $300. So, and myself, I don't know how to read those HOA documents really well. So if you guys do it for me, then I'm super grateful, and I really that's great, honestly. I don't want you to give them a loan for anything that it's not good for them anyways,
Gaga gets it.
Yeah. Thank you.
Yeah, my favorite
Well
email.
said, Gaga.
Yeah, my favorite email was from Ian that said, I wouldn't touch this complex with a 10-foot pole. So,
Yeah.
Sometimes there's complexes like that, and we're making sure you guys aren't leading your buyers into places like that.
So we'll be straightforward with you guys and we'll get it done. But just make sure you're being proactive and reaching out. Don't wait until you write an offer.
Yeah.
Like, tell us in advance.
Yeah.
Doesn't take much. I mean, a lot of these condo documents too are accessible online. Once we submit it, it goes into the condo queue, and I mean, these guys knock it out same day sometimes next day. But
same
usually
day we get docs
really
back.
quick.
Yeah, that's the turn time expectation is the same day we get docs back.
Yeah,
we can't control how fast we get the docs back always, but we can.
But you guys are
place the order, and we can control when
Johnny on the spot when it comes to actually getting those docs and like at least requesting them, Yeah. So, and worst comes to worst, we could pick up the phone and start harassing people. Steph, you got a question? Woohoo!
Yes. So I know that you said that if we have a seller, in a condo, that we can ask for the HOA docs and the HOA docs and the insurance. Is that something that owners get on a monthly basis from their HOA, or should be getting on a monthly basis? Or do they also have to ask their HOA? Because they're kind of expensive sometimes for the buyers.
Just the insurance and just the budget.
Oh, the insurance and the budget. Okay.
What most property managing entities and what most HOAs charge for is to fill out a questionnaire, or to fill out an estoppel request, or to fill out a resale disclosure statement, or to anything they have to fill out, they're going to charge for. But what we're talking about when you're doing the listing and you're trying to expand that buyer option on the listing. Excuse me. The HOA's approved budget, it already exists. And the HOA's current master insurance, it already exists. And every seller should have access to those documents through an HOA portal if they're not provided them on a seasonal basis.
They're usually quarterly. They send them out. Sometimes annually. I mean, it really depends on the HOA. But yeah, I mean, if budget and not
insurance.
budget
and insurance. Yes.
Budget and insurance.
Okay.
Budget and insurance.
Yeah,
awesome. Thank you.
Into my head.
Specifically budget insurance, because if you go to ask them for all the condo docs, they're going to give you 300 pages of governing documents that don't have anything to do with the review on an.
You don't need the CC&Rs.
You don't need CC&Rs.
No, budget and insurance.
The only time I need CC&Rs is I'm proving if a project has doesn't have a mandatory membership, that it's owned by the master association or a shared use amenities agreement. I very rarely have to dive into governing documents on established projects.
Cool.
Thank you so much.
Great question.
Good question.
Anybody else, you guys? Don't be shy.
And if you think of something, just email it to Ed.
Yeah, hit me up. And if I can't answer it, I'll get the answer for you short order.
Exactly.
Cool, you guys. Well, thank you so much, you guys. If there's no other questions, thanks a lot for coming out and spending Monday morning with me and Joey and Matt and all the rest of us in the room. Really appreciate it. Yeah, we'll be around all week long. making dreams happen. So
Yeah, thank you, Joey, for your time, man.
thank you so much,
An hour on a
Joey,
Monday is
coming
hugely
out.
appreciated.
Good.
You really appreciate it. You're awesome.
Thank
Thank you
Bye.
guys.
17 missed calls. Just
Next time I want to hear that banjo being played.
I mean,
Oh, he's got it within arm's reach. You're hilarious.
I'm gonna get yelled at for this.
I get too frustrated. I grab my.
Oh, the baby's downstairs, Eddie. We're making
Yep.
we're making requests with baby asleep. Come
That's
on.
awesome. Sorry. All right.
All right.
Thank you guys so much.
Have a great Monday,
Kevin.
everybody.
I'll talk to y'all soon. Have a great day. Thank you, Joey.